Hey, happy 4th of July weekend, everybody. Yeah, we had a little bit of a shorter week this week, but there's plenty for us to talk about, especially if you took the week off or maybe you had too much fun this weekend. I'm here to elevate your understanding of the oil markets and get you caught up for another big week ahead, especially going into an OPEC meeting here. I'm Aaron Kildaw of the Oil Balance with 30 years of experience in oil trading and analytics. So let's get into it. Okay, as usual, we're going to start out by looking at the price chart. The bulls were able to rally the market just above this trend line support that we have, a resistance level, now support line that was going on. I think that's a really important move. And that's kind of a big deal that the bulls were able to do that, especially after the big down week last week. It's, kind of natural that we bounce back a little bit, but the fact that they were able to bounce back and stay above this trend line support is probably a pretty big deal. Of course, we got the OPEC meeting coming up, and maybe that changes things. I'll talk about that a little bit more here in a minute. But just for right now, just speaking about the chart in front of us, I do want to point out volume was pretty low. Last week's volume was really good. Obviously, we had a big down move as the Israel-Iran war really was wrapping down. Hopefully, we'll get some sort of lasting peace there. I don't know. It's still a bit of a threat, I guess, to the overall markets going on, but nowhere near what it was the last couple weeks before that. But at any rate, volume, if you can see down here on the bottom, only about 53% of what it was the previous week. And yeah, we're counting 4 days against 5 days and that sort of thing, but I still think it's pretty good, a pretty good achievement for the bulls to be able to settle just above that trend line support number now. All right. So to get into the OPEC meeting this week, I do want to mention a couple things here. So again, thank you to Petra Logistics for providing me some numbers for us to go through here. So one of the things I want to go through is looking at the exports, because at the end of the day, that's really what matters. I mean, they can increase production. Sometimes they increase production, especially in the summertime, like in places like Saudi Arabia, where they have direct burn. So they're just consuming that crude oil. They're creating electricity to help cool off office buildings and all sorts of things. So maybe it's not quite as important that they're increasing production in the middle of the summer because there's lots, either the refining system or direct burn or stuff like that. What's maybe a little more important are these export numbers because that's what the rest of the world is getting. Obviously, you can see directionally since literally last June, we have been on a pretty choppy uptrend, but uptrend nonetheless. And now we're back to sort of levels at about 29.5 million barrels per day that we were in 2023 before they really started all these cuts. So I think that's an important thing. Of course, we have to wonder why we got the big increase in exports and we got the big increase in OPEC plus production as well in the month of June, May versus June. So again, a couple of things going on. Keep in mind in the context of things, there's a huge threat that maybe the Persian Gulf would be closed, the Strait of Hormuz would be closed, and we know for sure through stories in the marketplace that Saudi Arabia was coming up with or activating contingency plans that they had come up with previously. Part of that included to really ramp up exports to move barrels to places that they still can control outside of the Persian Gulf and maybe just park them there for a little bit. Iran was probably doing something similar. There's some aerial views of Karg Island, which is one of their big loading ports that has been pretty much cleared out now that you don't see as many vessels hanging out there now as we had before the whole conflict started. So maybe a month ago, you would have seen, 10, 20 ships, something like that, sort of hanging out around Karg Island. And now it's kind of a ghost town. You're not seeing much going on at all. So, like I said, there's still maybe a little bit of a threat going on that things could flare back up over there. But I think maybe part of this big increase in both exports and in production was just an effort to move product out, right, to get it out of the way. So, as I mentioned, we are going into an OPEC meeting on the 6th. I'm recording this on Friday, the 4th of July. So we'll see what sort of news happens. The last couple times they've met, they've actually met or come out with a decision earlier than we had expected. So maybe something will come out tomorrow and on Saturday. If it does, or even if it comes out on Sunday, I'll get back on here and give you some sort of update. So again, the market is basically looking for another continuation of these big increases. So probably something around 411,000 barrels per day is pretty much already baked in to the market. That's sort of what the market's expecting. So we need something outside of that to maybe surprise the market. I'm not saying the market wouldn't move on that, even though it's sort of expecting it. It would probably just be more of a muted move. Maybe a little bit of downside pressure that gets bought right back up for some reasons I'll show you here in a second. The other interesting thing I want to point out is if you go through the OPEC monthly oil report, they do have OECD crude oil stocks and product stocks as well, but this is just looking at crude stocks. So through since basically December, we have seen those OECD crude stocks building. And this in April and March and April is the time that OPEC started talking about, or OPEC Plus started talking about, yeah, we need to ramp up production. We see the demand is there. Maybe, but at the same time, you had, according to their own information, you had OECD crude stocks increasing. So, of course, those inventories are in arrears. The way those work on in the DOE reports or the OPEC reports or the International Energy Agency reports, those are all sort of in arrears. You need to go somewhere like KROS to get live and sort of up to date numbers, and that would be the source I would suggest if you're in the market and looking for that sort of thing. But at any rate, just going off of OPEC's own numbers, the fact that OECD crude had been increasing going into these decisions to increase production again makes us think that maybe they're just trying to justify, uh, the overproducers that are already out there, or something like that. We are seeing a big uptick again month on month, like I mentioned, coming from the OPEC 8. So just looking at the group that did decide to do, to join together and to sort of pull back and to cut oil from the market. But again, a lot of this, both on the export and on the production side, came from Saudi Arabia, month on month. All right, let's see what else we have here. So again, the OPEC meeting is supposed to be on July 6th. We might get something out, at least from a central time zone sort of thing on Saturday. That's what they've done the last couple of times, is they've actually come out the day before. As I mentioned, they're looking for a 411,000 barrel per day increase, as that's sort of what's already baked into the market at this point. So far, since they started increasing in May, that would be a 1.2 million barrel per day increase. And if they add another one this time for the month of August, that would be 1.6 million barrels per day total for the entire month. So just going back really quick, this increase from June versus May was just over 1 million barrels per day. I think 1.3 million barrels per day, something in that space. So they sort of did it all, it seems like, in 1 month. Maybe they were trying to control, there was some effort to try to control overproduction in this time period. But then from May into June, they're like, yeah, June, we're just going to go on and see what we can do. And all those other complications and things going on they mentioned before, like Israel, Iran conflict. So as I mentioned, the OPEC report showed OECD stocks increasing, crude stocks increasing. Product stocks actually did come down in the month of April versus March. But again, that shouldn't be too terribly surprising. But just keep in mind that global refinery demand should be maxing out now, sort of in July and August. September, it can sort of, it remains to be seen. It's kind of a bit of a shoulder period. By October, though, you really get into seasonal maintenance, and we're not going to need as much crude in October as we need right now in July and August. So the fact that they're talking about, and the market's pricing in, another 411,000 barrel per day increase, at least on paper, for the month of August, really leaves you not a whole lot of runway for September and October. So that those meetings are going to be very interesting when OPEC starts debating that and talking about what needs to happen. Ideally, I guess, for a healthy market, they would, we'd want to see OPEC maybe back up a little bit and maybe take some barrels off the market if they can. But that's going to be interesting. That's where the rubber's going to meet the road. Is the OPEC organization going to be able to to stay together, or are they going to want to break apart and everybody do their own thing again? Which is usually how these agreements sort of fall apart historically, is that everybody gets used to their production levels and nobody wants to cut back and everyone starts doing their own thing. So, at any rate, in the US, just looking at these inventories for these inventories are at places where you have NYMEX futures that would deliver into these zones. So, Cushing stocks are at the very bottom of the 5-year range again. I mean, we've been here for a while, but they keep drawing. If we were to sort of push this forward, obviously, uh, whenever we made this low here, inventory started going back up. We're not on that trajectory just yet. The interesting thing, though, is if you look at the basis markets, it does appear that that arb is trying to open between Midland and the X-pipe barrels at Cushing. So that is getting to the point where maybe it's starting to open up and maybe we see some extra flows going on. And that would be good. Let me just take a second really quick to mention that, I'm just trying to encapsulate what happened really quickly here with this presentation. If you want more detail, if you want a fuller, deeper explanation, please go to our website, theoilbalance.com. There's a button that says add me to your distribution list. The full presentation for this week is 30 slides. I go into a lot of different things this week, and you don't want to miss that. So, especially if you're trying to get caught up because you had too much fun this weekend. So, just putting that out there for you. Please go to our website, theoilbalance.com, and hit that add me to your distribution list button. All right. The other thing we want to point out is PAD 1B distillates. So, New York Harbor distillates are also very low, below the 5-year range. Gasoline is doing just fine, seemingly in the middle of the 5-year range. Not too much to worry about there. And then PAD 3 propane is actually doing pretty well. And we'll see how things happen. If we keep this production and growth trajectory going, we would probably end up making new highs in terms of inventory. At sort of the end of the year, sort of similar to natural gas, where you get this peak at the very end of sort of late summer, early fall, and then you go into heating demand again, and you start to draw down through the wintertime. So it looks very much more like a natural gas sort of inventory view than crude oil. On a national level, keep in mind that we're low on several things. So this is just looking at the EIA stats for this week. Total crude oil is low. PAD 2 total crude oil is on the bottom of the 5-year range. Cushing, as we just saw, is on the bottom of the 5-year range. PAD 3 has been bouncing around below the bottom of the 5-year range. So things are getting pretty tight, a little bit concerning on the crude oil side of things. Distillate, not just in New York Harbor, is tight, but everywhere it's looking tight. Again, on the bigger presentation, you have to go to our website to see. I go through all the pipeline ARBs that are going on right now that are pretty interesting around distillate and around low inventory. So again, please go to our website, theoilbalance.com, and click the add me to your distribution list button you see there. Residual fuel or fuel oil stocks have been very low all year and continue grinding lower. So that continues to be a bit of an issue. Gasoline and jet fuel, though, look like they're doing just fine. Propane on a national level, getting back up to year ago type levels. Again, pretty interesting, pretty steep trajectory, pretty steep set of builds here over the last couple of weeks. Looking at retail prices, sort of in detail about the different regions. If you can see this on your screen, hopefully you're watching this on a computer. It makes it a little bit more easier to see these numbers here. But decline in retail prices week on week for both diesel and gasoline. Gasoline coming off a little bit more than diesel, but still at pretty good levels, I would say, for the consumer. We want to keep a close eye on these numbers, of course, going forward as we go through the summer, but at pretty decent levels, pretty similar to year ago type levels. And demand is actually looking pretty decent right now anyway, for gasoline and diesel. RINs have gotten relatively expensive in the last week or so. I'm not sure what's going on there. I need to do some more digging for that. But even with the strong RINs, the Gulf Coast refining margin, the 321, is actually looking pretty good. A little bit better than last year. Nowhere close to anywhere where you'd worry about shutting anything down. What I do find interesting though is it's the jet and distillate side of things that continue to perform. Gasoline made this diverging move lower. It's now starting to turn around a little bit. Probably did a little bit too much damage, down a little bit too much over these past couple weeks, and now is starting to turn around. But really, we're still being led by distillate and jet. Of course, jet usually prices as a differential to distillate. So you could probably talk about it as diesel fuel doing all the work and jet just getting kind of sitting on its shoulders and getting pulled along for the ride. But again, this goes back to those charts I just showed you. Diesel inventories are low, both in pad 1, in pad 2 they're super low. Pad 3 they're getting a little bit concerning as well. Um, but we're seeing, that's where you're seeing appreciation in the margins, and gasoline, is actually looking at pre-summer type levels, which is interesting. As you know, there's a change in spec as you go into the summertime, and for us to be pricing, sort of spot barrels at pre-summertime, or sort of the stair step springtime type levels, I think is pretty interesting there as well. So just to go through the recap really quick, futures, as we mentioned, was able to bounce back and hold that support level. I think that's setting up the bulls pretty well. Again, low volumes made me a little bit wary of that, but I think we're set up for a good position if you're bullish anyway. Uh, After the week we've had this week, of course it'll depend on what OPEC does. If they do increase along the lines of 411,000 barrels per day, which is pretty much expected, maybe you don't get much of a reaction at all in the market. I would like to hear them talk about what they're planning on doing in the fall when demand just sort of seasonally starts to drop off. And then also sort of questioning what happened with the big increase that we saw in the month of June, both in exports and production. Was that really more a function of Israel and Iran and folks in the Persian Gulf trying to move barrels out, at least in terms of the export numbers? Crude oil and distillate stocks are getting very low, both in terms of the NYMEX delivery points and just nationwide. They're quite low. Retail prices actually went lower this week, which is good. We need to keep them as low as we can for as long as we can. Demand has actually been really good on the domestic side here lately. And then refining margins still look pretty good. So, they're not fabulous, but they're not terrible. So that should keep the demand coming on the crude oil side of things, again, until we get into that seasonal period where you just start to slow down, both on a demand front and then just for maintenance, you start to slow down a little bit. So anyway, hope that helps. Hope that gets you caught up to everything. Please like and subscribe, and have a great week. We'll talk to you later. Bye.